Based on the historical data and forecast, Bitcoin has been fluctuating within a range, with support at $86,300 and resistance at $92,500. The RSI indicates that the asset is currently neither significantly overbought nor oversold, hovering around 40 to 50. The Bollinger Band suggests that the price is nearing the lower band, indicating a potential bounce. Given this, I recommend a moderately bullish strategy. We will initiate a long position at $88,100, anticipating a rebound from the lower Bollinger Band and the support level. The stop loss will be set at $86,300, just below the support price, to limit potential losses. Our target price will be $92,500, aligning with the resistance level. To refine this strategy, we will incorporate RSI signals. If the RSI drops below 20, signaling an oversold condition, we will enter a long position at the forecasted price of $87,100. The stop loss will be at $86,300, and the target will be $90,000. Conversely, if the RSI exceeds 80, indicating an overbought condition, we will consider a short position, but with the current bearish forecast, we will refrain from that action. This blended approach, combining Bollinger Bands and RSI, aims to maximize potential returns while mitigating risk by utilizing clearly defined entry, stop loss, and target prices. Based on the historical data and forecast, Ethereum has shown volatility with a recent downtrend. The RSI values indicate that the asset is currently in a neutral to slightly oversold territory, fluctuating between 42 and 58. The Bollinger Bands show that the price has been trending within a range, recently approaching the lower band, suggesting a potential for a bounce. Considering these factors, I propose a contrarian strategy aiming to capitalize on a potential rebound. We will initiate a long position at $2,950, coinciding with the forecast price on December 23, 2025. A stop loss will be placed at $2,900 to limit potential losses if the downtrend continues. The initial target price will be $3,080, aligning with the forecast price for December 23, 2025. To refine the strategy, we'll incorporate the Bollinger Bands as a secondary indicator. If the price touches the lower band and shows signs of rejection, it strengthens the buy signal. Furthermore, if the RSI moves above 50 during the trade, it suggests strengthening momentum, prompting a potential adjustment of the target price to $3,120. Conversely, if the price breaks below the stop-loss level of $2,900, the position should be closed immediately to prevent further losses. This combined approach leverages both technical indicators to maximize potential returns while managing risk effectively. Based on the historical data and forecast, BNB has shown a downtrend recently, with the price fluctuating between a support of $857 and a resistance of $896. The RSI indicates that the asset is currently in the oversold territory, hovering around 40 to 45, suggesting a potential for a short-term bounce. The Bollinger Bands show that the price is currently near the lower band, further supporting the possibility of a rebound. Considering these factors, I recommend a contrarian strategy focusing on short-term gains. We will initiate a long position at $867, placing a stop loss at $857 to protect against further downside. The target price will be set at $896, aiming to capture the upward movement towards the resistance level. To refine this strategy, we will incorporate RSI signals. If the RSI rises above 50, we will consider taking profits at $896. If the RSI falls below 20, we will consider exiting the position and re-evaluating the market. This combined approach allows us to capitalize on the potential rebound while managing risk effectively. The predicted forecast price for December 17, 2025, is $878, which aligns with our entry price and reinforces the potential for a positive return. Therefore, this strategy offers a balanced approach to trading BNB, combining technical indicators and price action analysis for optimal results. Based on the historical data and forecast, XRP exhibits a downtrend. The price has been consistently declining from December 3, 2025, to December 16, 2025, and the forecast indicates a continuation of this downward movement. The RSI values have generally been below 50, suggesting a bearish momentum, and have recently entered oversold territory, hovering around 34.7 to 37.6. Considering the support price of $1.9 and the forecast price dropping to $1.82, a short position appears strategically sound. I recommend entering a short position at $1.93, placing a stop-loss order at $1.96 to protect against a potential reversal, and setting a target price of $1.82 for a substantial profit. To refine this strategy, we'll incorporate the Bollinger Bands. The price is currently trading below the lower band, confirming the downward trend. Given the oversold RSI and the price nearing the support level, a conservative approach is warranted. Therefore, I suggest a portfolio composed of 60% of the short position at $1.93 with a stop-loss at $1.96 and a target of $1.82, and 40% of a wait-and-see strategy, observing the market's reaction to the $1.82 level. This blended strategy balances the potential for profit with risk management, capitalizing on the current downtrend while allowing for flexibility as the market evolves. Based on the historical data and forecast, Solana shows a downtrend. The price has been fluctuating within a support of $127 and resistance of $136. The RSI has been consistently below 50, indicating weakening momentum. The forecast suggests a further decline to $124. Considering these factors, I recommend a short position strategy. The entry price should be $131, with a stop-loss placed at $136 to protect against a potential reversal. The initial target price is $127, aligning with the established support level. To refine this strategy, we'll incorporate the Bollinger Bands. The price is currently near the middle band, suggesting a potential bounce. However, the downward trend and RSI readings favor a short position. Therefore, if the price touches the upper band at $143, we will exit the position to secure profits. If the price reaches the target of $127, we will move the stop-loss to the entry price of $131 to secure profits. This combined strategy offers a balance between capitalizing on the downtrend and managing risk effectively. Based on the historical data and forecast, TRON shows a slight upward trend with fluctuating volatility. The RSI consistently stays within the 33 to 52 range, indicating neither strong overbought nor oversold conditions. The Bollinger Bands are narrowing, suggesting a period of consolidation before a potential breakout. Given the forecast prices trending slightly upwards, I recommend a moderately bullish strategy. We will implement a combined strategy leveraging RSI and Bollinger Bands. The entry price will be $0.281, coinciding with a bounce from the lower Bollinger Band and an RSI around 44. The stop-loss will be set at $0.277, just below the support level, to limit potential losses. The initial target price is $0.286, aligning with the upper Bollinger Band and a minor resistance level. To maximize returns, we will employ a dynamic target price adjustment. If the price reaches $0.286, we will move the stop-loss to the entry price of $0.281 to secure profits. If the price continues to rise, we will adjust the target price to $0.285. This strategy combines technical indicators with support and resistance levels to capitalize on the predicted upward momentum while managing risk effectively. The combined strategy offers a balance between potential gains and downside protection, suitable for a moderately bullish outlook on TRON. Based on the historical data and forecast, Dogecoin shows a downtrend with decreasing momentum. The price has consistently tested the support level of $0.13, and the forecast indicates further decline towards $0.122. The RSI consistently stays below 50, indicating a bearish sentiment. The Bollinger Bands are narrowing, suggesting decreasing volatility. We will implement a short selling strategy targeting a significant downward movement. The entry price will be $0.132. A stop-loss will be placed at $0.135, just above the upper Bollinger Band to avoid premature exits due to short-term fluctuations. The initial target price is $0.125, aligning with the forecast and a substantial price reduction. To maximize returns, we will employ a dynamic strategy. If the price reaches the initial target of $0.125, we will move the stop loss to the entry price of $0.132, securing profits and allowing for potential further gains. The final target price will be $0.122 based on the forecast. This strategy combines the RSI's oversold signals with the Bollinger Band's volatility contraction and the forecast data to create a high probability, high return short selling opportunity. The portfolio will be 60% short Doge-Coin, 30% in stable coins, and 10% in cash. Based on the historical data and forecast, Cardano exhibits a downtrend with increased volatility. The RSI consistently hovers around the 40s, indicating neither strong overbought nor oversold conditions. The Bollinger Bands show widening bands, suggesting increased price fluctuations. Given the forecast predicting further decline, I recommend a short selling strategy. Entry price will be $0.385, with a stop loss placed above the upper Bollinger Band at $0.466 to mitigate potential losses if the price unexpectedly rebounds. The target price will be $0.372, aligning with the forecast. This strategy combines technical indicators and price forecasts for a high probability trade. If the price breaks below the support level of $0.357, the stop loss can be adjusted to $0.35 for enhanced risk management. This position aims to capitalize on the anticipated downward trend while incorporating safeguards against adverse price movements. Based on the historical data and forecast, Bitcoin Cash has shown volatility with a recent downward trend. The RSI consistently fluctuates, but has been below 60 for the last few days, indicating it's not severely overbought. The Bollinger Bands show that the price is currently near the upper band, suggesting a potential pullback. Given this, I propose a cautious short strategy. We will enter a short position at $532, placing a stop loss at $545 to protect against an unexpected upward surge. Our initial target price will be $514, aiming to capitalize on the potential pullback towards the lower Bollinger Band. To refine the strategy, we'll incorporate RSI signals. If the RSI drops below 40, indicating an oversold condition, we will close the position and secure profits at $514. Conversely, if the RSI rises above 70, signaling an overbought condition, we will adjust the target price to $530, anticipating a further decline. This dynamic approach, combined with the Bollinger Band and support level, aims to maximize returns while managing risk effectively. The support price of $480 will be used as a final safety net, closing the position if the price falls below this level. Based on the historical data and forecast, Wrapped Beacon ETH shows a downtrend, particularly evident in the recent forecast prices. The RSI consistently hovering below 60 indicates that the asset is not strongly overbought. Considering the support price of $3,030 and the forecast prices, I recommend a short position strategy. Enter a short position at $3,350, placing a stop loss order at $3,610 to protect against a potential upward reversal. The initial target price is $3,220, aligning with the forecast. If the price reaches $3,220, consider moving the stop loss to break even to protect profits and potentially ride the trend further. To refine the strategy, I incorporate Bollinger Bands. The price consistently trading near the upper band suggests a potential pullback. I will combine this with the RSI strategy. If the RSI falls below 30, indicating an oversold condition, consider covering the short position at $3,210. This approach combines trend following with mean reversion, aiming for high returns while managing risk. The overall portfolio will prioritize the short position with a 70% allocation, while a small amount of capital will be allocated to the RSI strategy to take advantage of mean reversion opportunities. Based on the historical data and forecast, Bitcoin Cash has shown volatility with a recent downward trend. The RSI consistently fluctuates, but has been below 60 for the last few days, indicating it's not severely overbought. The Bollinger Bands show that the price is currently near the upper band, suggesting a potential pullback. Given this, I propose a cautious short strategy. we will enter a short position at $532, placing a stop loss at $545 to protect against an unexpected upward surge. Our initial target price will be $514, aiming to capitalize on the potential pullback towards the lower Bollinger Band. To refine the strategy, we'll incorporate RSI signals. If the RSI drops below 40, indicating an oversold condition, we will close the position and secure profits at $514. Conversely, if the RSI rises above 70, signaling an overbought condition, we will adjust the target price to $530, anticipating a further decline. This dynamic approach, combined with the Bollinger Band and support level, aims to maximize returns while managing risk effectively. The support price of $480 will be used as a final safety net, closing the position if the price falls below this level. Based on the historical data and forecast, Jupiter exhibits a clear downtrend. The price has been consistently declining, with the forecast predicting further drops. The support level remains at $0.19, and the resistance is at $0.216, indicating limited upward potential in the short term. The RSI consistently hovers below 50, with recent readings below 30, suggesting the asset is oversold. Bollinger Bands are also widening, confirming the increasing volatility and downward momentum. Therefore, I recommend a short selling strategy to capitalize on this trend. My strategy involves entering short positions when the RSI falls below 30 and the price touches the upper Bollinger Band. Specifically, enter short at $0.193. Place a stop-loss order slightly above the upper Bollinger Band at $0.196 to limit potential losses if the price unexpectedly reverses. Set a target price at $0.167, aligning with the forecast and allowing for a significant profit margin. This strategy combines RSI oversold signals with Bollinger Band confirmation to maximize profit potential while managing risk. This is a high-risk, high-reward strategy suitable for experienced traders. Based on the historical data and forecast, Sky shows an overall upward trend with recent price volatility. The RSI values fluctuate between 50.5 and 62.8, indicating periods of both neutral and slightly overbought conditions. The Bollinger Bands have been widening recently, suggesting increasing market uncertainty and potential for price swings. Considering the support price of $0.0592 and resistance price of $0.0646, and the forecast prices showing an upward trajectory, I recommend a long position strategy focusing on capitalizing on upward momentum while mitigating risk. My strategy is to enter a long position when the RSI dips below 30, oversold, or when the price touches the lower Bollinger Band. Given the current RSI of 62.3 and forecast prices, let's wait for a pullback. If the price falls to $0.058, enter a long position with an entry price of $0.058. Place a stop-loss order at $0.055 to limit potential losses. Set a target price at $0.064, aiming to capture a significant portion of the upward potential. This strategy combines RSI and Bollinger Band signals to identify optimal entry points and manage risk effectively, aligning with the overall bullish outlook for Sky. Based on the historical data and forecast, Uniswap shows a downtrend. The price has been consistently testing the support level of $5.08 and failing to break above the resistance of $5.75. The RSI consistently remains below 50, indicating a weakening momentum, and the forecast predicts further decline. Considering this, I recommend a short selling strategy. We will initiate a short position at $5.32. To mitigate risk, place a stop-loss order at $5.35, just above the upper Bollinger Band. For the target price, we aim for $5.02, aligning with the forecast price on December 19, 2025. This strategy capitalizes on the anticipated downtrend while incorporating technical indicators for risk management. To refine this strategy, we will integrate an RSI-based approach. If the RSI falls below 35, indicating an oversold condition, we will close the position at $5.08, securing a profit. Conversely, if the RSI rises above 50, suggesting a potential trend reversal, we will also close the position at $5.32. This dynamic adjustment, combined with the Bollinger Bands and forecast data, creates a robust portfolio. The final portfolio will be 60% short selling, 20% RSI oversold exit, and 20% RSI reversal exit. This balanced approach optimizes for high returns while minimizing potential losses. Based on the historical data and forecast, Ethereum Classic demonstrates a downtrend, with the price consistently declining from $14.2 to a forecast of $12. The RSI values fluctuate but generally remain below 50, indicating weakening momentum. The Bollinger Bands show the price nearing the lower band, suggesting potential for further decline. Considering these factors, a short selling strategy is recommended. We will enter a short position at $12.7, placing a stop-loss order at $12.4 to limit potential losses if the price unexpectedly reverses. The initial target price will be $11.9, aiming to capitalize on the expected downtrend. To refine the strategy, we'll incorporate RSI signals. If the RSI falls below 30, indicating an oversold condition, we will reevaluate the position. If the RSI reaches $36.3 on December 16, 2025, we will hold the position. Conversely, if the price touches the support level of $12.3, we will tighten the stop loss to $12.4. If the forecast price reaches $12.2, we will adjust the target price to $11.9. This dynamic approach, combining technical indicators and price action, aims to maximize returns while managing risk effectively. Based on the historical data and forecast, Sui shows a downtrend. The price has been fluctuating between the support of $1.35 and the resistance of $1.66. The RSI consistently stays around 40 to 50, indicating a neutral to slightly bearish momentum. The Bollinger Bands show that the price is approaching the lower band, suggesting a potential for further decline. The forecast for the next week predicts a continuous decrease, with prices falling to $1.39. Therefore, a short selling strategy is recommended. We will implement a tiered short selling strategy. The entry price will be $1.47, with a stop loss set at $1.51 to limit potential losses. The initial target price will be $1.44, based on the forecast and the lower Bollinger Band. If the price reaches $1.44, we will move the stop loss to the entry price of $1.47 to secure profits. If the price continues to fall, the final target price will be $1.39, aligning with the forecast. This strategy combines technical indicators and price forecasts to maximize potential returns while managing risk effectively. Based on the historical data and forecast, DAO demonstrates a downtrend. The RSI consistently fluctuates below the 50 level, indicating a bearish sentiment. The forecast data further supports this trend, predicting a continued decline. The support price of $0.353 acts as a potential floor, while the resistance at $0.382 may offer temporary resistance. Given this information, I recommend a short selling strategy. Entry price will be $0.365. The stop loss will be set at $0.382, just above the resistance level, to limit potential losses if the price unexpectedly reverses. The initial target price will be $0.353, coinciding with the support level. To refine the strategy, we'll incorporate the Bollinger Bands. The price is consistently trading near the lower band, reinforcing the downtrend. I suggest a tiered approach. After reaching the initial target price of $0.353, we'll move the stop loss to break even. If the price continues to decline, we'll adjust the target price to $0.348, based on the forecast. If the RSI reaches an oversold level of 20, we'll consider covering the short position, as a potential rebound might occur. This combined strategy, integrating RSI, Bollinger Bands, and forecast data, offers a balanced approach to capitalize on the anticipated downtrend while mitigating risk. Based on the historical data and forecast, Morpho shows a clear downtrend. The price has been consistently declining from $1.49 to a forecasted $1.05. The RSI consistently remains below 30, indicating oversold conditions, but failing to reverse the trend. The Bollinger Bands are contracting, suggesting decreasing volatility. The support price is holding steady at $1.12, while the resistance is at $1.2. Considering this, I propose a short selling strategy. Enter a short position at $1.18, placing a stop loss at $1.2 just above the resistance level to limit potential losses. The initial target price is $1.05, aligning with the forecast and a significant drop from the entry point. To refine this strategy, we can incorporate the RSI and Bollinger Band signals. When the RSI dips below 20, it signals an extremely oversold condition, potentially indicating a short-term bounce. However, given the overall downtrend, we should still prioritize the short position. Therefore, if the price reaches $1.14 and the RSI is below 20, consider adding to the short position. A second target price can be set at $1.06 based on the forecast. Adjust the stop loss to $1.15 if the price bounces slightly, protecting profits while allowing for minor retracements. This combined approach leverages both trend analysis and technical indicators for a high probability, high reward investment opportunity. Based on the historical data and forecast, Dogecoin shows a downtrend. The price has been fluctuating between a support of $1.5 and a resistance of $1.65. The RSI has been mostly below 50, indicating a bearish momentum, and the forecast suggests a further decline to $1.43. We will implement a short strategy. I suggest entering a short position at $1.65. The stop loss should be placed slightly above the resistance at $1.7 to avoid being trapped in a potential false breakout. The initial target price will be the support level of $1.5. To refine the strategy, we'll incorporate the Bollinger Bands. The price is currently near the upper band, suggesting a potential pullback. We will adjust the target price based on the forecast. If the price reaches $1.5, we will take partial profits and move the stop loss to the entry price of $1.65. If the price continues to decline as forecasted, we will set a second target price at $1.43. This combined approach, utilizing RSI, Bollinger Bands, and the forecast, aims to maximize returns while managing risk effectively. Based on the historical data and forecast, Quant exhibits a clear downtrend. The price has been consistently declining from $94.9 to $77.9, with the forecast predicting further descent to $74.3. The RSI consistently hovers below 50, reaching as low as 36.5, indicating oversold conditions. The Bollinger Bands are widening, suggesting increased volatility and a potential for further price movement. My recommended strategy is to implement a short position, capitalizing on the existing downtrend. Specifically, enter a short position at $77.9. Given the strong downtrend and the proximity to the support level of $75.3, a stop loss should be placed at $79.3 to protect against a potential reversal. A target price of $74.3, aligning with the forecast, offers a reasonable profit margin. To refine this strategy, I will incorporate elements from the RSI and Bollinger Bands. The RSI reading of 40.7 suggests a potential bounce, but the overall trend remains bearish. Therefore, I will maintain the short position. A tighter stop loss at $78.5, just above the forecast price of $76.1, will provide more room for maneuver. The target price remains at $74.3, capitalizing on the predicted downward trajectory. This combined strategy, leveraging the downtrend, RSI readings, and Bollinger Bands, offers a balanced approach to maximize potential returns while managing risk effectively. The portfolio will be 60% short position, 30% waiting for the price to bounce and 10% for risk management.